Every single time a new Federal Reserve chair has taken office in Bitcoin's history, the crypto market has crashed. Every single time, without exception. Janet Yellen took over and Bitcoin crashed 83%, Jerome Powell took over the first time and Bitcoin crashed 84%, Powell's second term began and Bitcoin crashed 77%, and now in 2026, a new Fed chair has just taken office. His name is Kevin Warsh. He officially became the chair of the Federal Reserve on May 15, 2026, and the question every crypto investor is asking right now is simple: will history repeat itself? Will Bitcoin crash again? In this video I am going to break down everything you need to know about Kevin Warsh. What he believes about interest rates, how he could impact Bitcoin and crypto, what the historical data tells us, and most importantly what you should do right now to protect your portfolio. This is one of the most important videos I have made for this channel. Stay with me until the end because the information in the last section could save you a lot of money. Let's get into it. Before we talk about Kevin Warsh specifically, we need to understand why the Federal Reserve chair has such a massive impact on the crypto market. The Federal Reserve is the central bank of the United States. It controls two of the most powerful levers in the entire global economy. The first lever is interest rates. When the Fed raises interest rates, borrowing money becomes more expensive. This means less money flows into risky investments like crypto and stocks. Investors move their money to safer options like government bonds that now pay higher yields. The result, Bitcoin and crypto prices fall. When the Fed cuts interest rates, the opposite happens. Borrowing becomes cheap, money floods into risk assets. Bitcoin pumps. The second lever is liquidity. The Fed can inject trillions of dollars into the financial system through a process called quantitative easing, or it can drain money out through quantitative tightening. More liquidity equals higher crypto prices, less liquidity equals lower crypto prices. As of May 2026, the Fed has held interest rates at 3.5 to 3.75%. The current QT program is still ongoing but at a slower pace than 2023 and 2024. Now here is the critical thing. To understand, crypto is a risk-on asset. It thrives when liquidity is high and interest rates are low. It suffers when liquidity is tight and rates are high. Whoever controls the Fed controls the liquidity tap for the entire global financial system. And that person just changed. Now let's talk about the historical pattern that has every serious crypto investor paying close attention right now. Here is the data. Every single time a new Federal Reserve chair has taken office during Bitcoin's existence, Bitcoin has crashed by at least 77%. When Janet Yellen became Fed chair in February 2014, Bitcoin was coming off its first major bull run. Within the following period Bitcoin crashed 83%. When Jerome Powell became Fed chair for the first time in February 2018, Bitcoin had just hit its then all-time high of nearly $20,000 in December 2017. Bitcoin proceeded to crash 84% over the following year. When Powell began his second term in 2022, crypto was at peak euphoria with Bitcoin near $69,000. Bitcoin then crashed 77% to under $16,000 by the end of 2022. Now Kevin Warsh officially took the chair on May 15, 2026. Bitcoin at the time of this recording is trading around $82,000, which is already approximately 35% below its all-time high of $126,198 set in October 2025. The pattern is clear. The question is whether this time will be different, and there are important reasons to think it might be, but also important reasons to be very cautious. So who exactly is Kevin Warsh and what does he believe? Kevin Warsh is not a stranger to the Federal Reserve. He previously served as a Fed governor from 2006 to 2011 during the height of the 2008 financial crisis. On January 30, 2026, President Trump officially nominated Kevin Warsh to succeed Jerome Powell, and on May 15, 2026 Warsh officially took the chair. Now here is what makes Warsh interesting and potentially important for crypto. His financial disclosure has revealed that he holds interests in crypto-oriented assets including Polymarket, the Ethereum-based prediction market platform, Tenderly, an Ethereum developer infrastructure company, and Lemon Cash, a crypto financial services platform. This means the new Fed chair is personally familiar with crypto and blockchain technology, not just as a regulator but as an investor. This is something no previous Fed chair has had, however, and this is critical. At his Senate Banking Committee confirmation hearing on April 21, 2026, Warsh made headlines by strongly emphasizing the Federal Reserve's independence from political pressure. Specifically, he pushed back on speculation that President Trump could pressure him to cut rates, quote, "Never once asked me to commit to any particular interest rate decision period, and nor would I ever agree to do so." This statement caused Bitcoin to slide towards $75,000 on the day of his hearing because markets had been hoping for a more dovish signal. Now let's talk about the two possible scenarios for what Warsh could do and what each scenario means for your crypto portfolio. Scenario A is the dovish scenario. In this scenario, Warsh signals openness to rate cuts, expresses confidence that inflation is under control, and begins easing monetary policy. This would inject more liquidity into the financial system. Risk on assets like Bitcoin would benefit significantly. Analysts have suggested a potential 25% rally in Bitcoin if the new Fed chair takes a clearly dovish stance. For context, that would put Bitcoin somewhere around $100,000 to $105,000 from current levels. The first major test of this scenario will be the FOMC meeting on June 17, 2026. This will be the first Fed policy announcement under Warsh's leadership, and it will set the tone for the rest of the year. Scenario B is the hawkish scenario. In this scenario, Warsh maintains or increases rates, continues the quantitative tightening program, and prioritizes fighting inflation over stimulating growth. Warsh inherited an extremely difficult macro environment. As of May 2026, CPI inflation is at 3.3%, oil prices are at $115 per barrel, and a Hormuz blockade affecting global oil supply has been ongoing for 10 weeks. If Warsh is forced to keep rates high or even raise them to fight this inflation, the crypto market could face serious headwinds. Historical precedent suggests this could trigger the kind of major drawdown we have seen every time a new Fed chair has taken office. Now let's talk about the other major macro factors that are adding pressure to the crypto market right now alongside the Fed chair transition. The first factor is the Strait of Hormuz situation. The Hormuz blockade, which has been ongoing for 10 weeks as of May 2026, is keeping oil prices elevated at $115 per barrel. High oil prices drive inflation. High inflation forces the Fed to keep rates high or raise them. This is a direct headwind for Bitcoin and crypto. The second factor is the AI spending battle. Big tech companies led by Microsoft, Google, Amazon, and Meta are engaged in a $600 billion AI spending spree in 2026. This is splitting financial markets. On one hand, it is driving massive growth in AI stocks. On the other hand, it is absorbing enormous amounts of institutional capital that might otherwise flow into crypto. The third factor is retail migration. Data from 2026 shows that retail investors are migrating from crypto into prediction markets. Platforms like Polymarket are seeing massive growth as retail speculators find a new home outside of crypto. This reduces the retail demand that has historically driven altcoin rallies. The fourth factor is ETF flows. The strongest ETF inflow streak of 2026 broke on April 27, 2026. This was a significant signal because it showed that institutional demand for Bitcoin through ETFs was pausing, since Bitcoin's price has been tightly correlated with ETF inflows since January 2024. Any sustained decline in ETF inflows is a warning signal for the price. Now I want to be balanced here and give you the reasons why this time might actually be different from previous Fed chair transitions. Reason 1 is institutional adoption. Previous Fed chair transitions happened before Bitcoin ETFs existed, before BlackRock, Fidelity, and other institutional giants entered the market. Today in 2026, Bitcoin ETFs hold over $100 billion in assets. These institutions do not panic sell at the first sign of macro uncertainty. They are long-term holders that buy on dips. This is a structural support for Bitcoin that did not exist during previous transitions. Reason 2 is Bitcoin's maturity as an asset class. Bitcoin no longer trades purely as a speculative gamble. It is increasingly treated as digital gold and a macro hedge by institutional investors. When macro uncertainty rises, some investors are now buying Bitcoin as a safe haven, not selling it. Reason 3 is Kevin Warsh's personal crypto exposure. As mentioned, Warsh holds interests in crypto-oriented assets. While this does not guarantee a crypto-friendly Fed policy, it does suggest a level of understanding and openness to digital assets that previous chairs did not have. Reason 4 is the regulatory environment. The approval of Bitcoin ETFs in January 2024, the advancement of the Clarity Act for stablecoins, and the generally more crypto-friendly stance of the Trump administration in 2026 create a regulatory backdrop that is far more supportive than in previous cycles. Now let me give you the most important thing you need to know. What should you actually do right now? Here is my practical framework for navigating the Kevin Warsh era as a crypto investor in 2026. Action 1 is to watch the June 17 FOMC meeting extremely closely. This is the first Fed policy announcement under Warsh, and it will tell you everything about the direction he plans to take. Watch for the language he uses about inflation, rate cuts, and quantitative tightening. Dovish language means green light for crypto. Hawkish language means exercise caution. Action 2 is to manage your risk appropriately. If you are heavily leveraged in crypto right now, the historical pattern of Fed chair transitions warrants serious caution. Consider reducing leverage and ensuring you have a cash or stablecoin reserve that you can deploy if Bitcoin drops significantly. Action 3 is to watch ETF inflows weekly. Bitcoin ETF inflow data is published regularly. If inflows resume strongly after the Warsh transition, that is a bullish signal. If outflows begin, that is a warning sign to be cautious. Action 4 is to focus on quality assets. In periods of macro uncertainty, the projects with the weakest fundamentals get hit the hardest. Bitcoin, Ethereum have the strongest institutional backing and are the most likely to recover from any drawdown. Speculative altcoins carry significantly higher risk during these periods. Action 5 is to think long-term. Even if history repeats and Bitcoin sees a major correction under the new Fed chair, Bitcoin has recovered from every single one of those previous crashes and gone on to make new all-time highs. So let's bring this all together. Kevin Warsh became the new Federal Reserve Chair on May 15, 2026. Every previous Fed chair transition in Bitcoin's history has triggered a crash of at least 77%. Warsh inherited the most difficult macro environment of any new Fed chair, including 3.3% inflation, $115 oil, and an ongoing Hormuz blockade. At his confirmation hearing, Warsh strongly emphasized Fed independence and pushed back on expectations of quick rate cuts, causing Bitcoin to briefly slide towards $75,000. However, there are genuine reasons why this time could be different, including institutional ETF adoption, Bitcoin's maturity as an asset class, Warsh's personal crypto familiarity, and a more supportive regulatory environment. The most important date to watch is June 17, 2026, which is the first FOMC meeting under Warsh's leadership. The language from that meeting will set the direction for crypto for the rest of 2026. Manage your risk, watch the data, and never invest more than you can afford to lose. If this video helped you, please hit the like button and subscribe to the Crypto Skill for daily crypto updates. Drop a comment below. Are bullish or bearish on crypto under the new Fed chair? Let me know.